It's Wednesday, January 20th, 2021, and the United States does have a new president. President Joe Biden has been sworn in following months of misinformation around the election results. With the COVID-19 pandemic still raging on, the economy and the markets are looking forward to a stimulus package and the confirmation of Janet Yellen as Treasury Secretary. So, where do we go from here? Joining me today is Chris Versace, Real Money contributor, Jeff Marks, senior portfolio analyst with Action Alerts Plus, and Bob Lang, Real Money contributor as well. Guys, I want to start by talking about how we've gotten past the hurdle that was a peaceful, or at least somewhat peaceful, transition of power, and stocks have moved up today. So, Chris, what's next for the markets?
Markets are trying to brace for as we really go into earnings season is going to be a couple things. One, what's the speed with which now President Biden's stimulus plan and his other agenda items can be put into motion? And more importantly, what do we hear during the earnings season in terms of prospects for earnings being lifted relative to expectations for 2021? When you look at the stock market, it's had a great run over the last several months. The PE valuations are arguably stretched, so any real extra oomph or lift in the market's going to have to be on the earnings side.
All right, and Jeff, I want to ask you, you work closely with Jim Cramer over on Action Alerts Plus, so what are you guys going to be watching?
Yeah, I think Chris kind of nailed it there with regards to we have earnings season coming up, and that's going to give us tremendous insight into some of the cost savings actions that a lot of these companies have put into place over the last 6 to 8 months, 10 months since the pandemic really started. And we'll finally, we'll get their outlook for the future. Will guidance come back? A lot of guidance was suspended over the last couple quarters just due to uncertainty. I'm still not sure yet if we'll get full year guidance from a lot of companies. However, we should get a more clearer picture into what these companies are expecting. And a lot of companies, they have a lot of cash on their balance sheets. So, we may hear more returns of share repurchases, dividends, more of a capital return story as well. So I think from a fundamental outlook, it's earnings picture, it's the pace of the vaccine rollout, and also interest rates. They're kind of holding up here in this range, but the next move higher, the next direction in interest rates, higher or lower, could dictate certain stocks as well.
All right, so Bob, I'm going to ask you to zero in here. What kind of stocks are you eyeing?
I'm looking at stocks, Catherine, in the healthcare group. Also, I'm looking at names that are probably supportive of President Biden's plan to do more spending in the infrastructure side. And we're talking more about industrial names, names like Caterpillar and John Deere. Those are the ones that come to mind right now. But also some names that are going to take advantage of new orders that are starting to come in on the building side, on the infrastructure side. Chris and I talked about this the other day about architectural billings. That's a that I pretty much follow from month to month. It kind of gives an idea of what the future is going to look like in terms of building and construction. And it's been on the flatter side of the past 6 to 8 months, but it's starting to pick up. And I think when some of these bills are passed, the spending bills especially, we'll see a lot of action with some of these companies. So I think the infrastructure side is really a good place to be. Healthcare, as I mentioned before, names like United Healthcare, Humana. I'd even look to a fringe name on the healthcare side, and that would be Teladoc, TDOC. Some people have kind of pigeonholed as a stay-at-home type of a company. I really don't think that's true. I think this is a company that's got a very, very large market share of the medicine field, and I think this is something that's here to stay. It's not necessarily going to go away. So the healthcare area, I think that's certainly an area that's going to do well. I'd also throw in there HCA and Tenet Healthcare too. I think a couple of those names that Jeff and the Action Alerts Plus team have been on in the past.
Chris, starting with you, I want to know if any of you guys were surprised about this reaction to the inauguration based on the events that we've seen since November. Jeff, what about you?
The person who you're trying to is currently unavailable.
Yeah, so I think that was a great question. You would have thought that a lot of it from the election, we've been talking about, the possibility of a blue sweep ever since the summer, and I think there has been a lot of that priced into the market, especially when we're looking at some of the renewable energy trade. But I think why stocks are really going higher today, it's this prospect of more fiscal stimulus, more spending. Yesterday, you had incoming Treasury Secretary Janet Yellen talk about the need to go big, how now's the time to spend. And I think that all trickles down into stocks, whether it's through direct payments that should help boost some retail names, direct payments that also people putting money and work in the stock market with that money as well. I think that's a tailwind. And with interest rates as low as they are, and with each day more people getting vaccine, I think that's just the fundamental setup right now that is extending this rally to record territory.
And Bob, were you surprised?
I wasn't really surprised about this reaction because, as we talked not long before the election in October, and we noted that volatility was elevated, and then all of a sudden we talked back then that once the event was over, that we would see volatility start to recede, and it would be a great opportunity to get into stocks and run up. So again, this is remember, market volatility is a function of uncertainty, and usually markets like uncertainty. And so when that uncertainty is removed, and the uncertainty, what do we have the uncertainty today is, was there going to be some kind of violence or some kind of an event that's happening that it was not natural with the inauguration. That occurred. And I think people are breathing a sigh of relief, are excited and are happy about the new president, what the future has for us. Much like what happened after the election, when we saw a big sell-off coming into Halloween, and just later we had the election, and volatility just got slammed. It's been getting hammered for the past couple of days as well too. And when there's less uncertainty in the markets, and again, with the election, it was the uncertainty of that, and then this week it was the uncertainty about what extra event is going to happen after what we saw on January 6th. So is there something going to be carryover from that? So no, I'm not really surprised, and I think that the market is a smart vehicle. It's a discounting mechanism. It's looking ahead, and as Jeff said, it's going to be all about earnings, and if earnings are going to be good over the next 2-3 quarters, the stock market today is reflecting that, and we'll probably see good earnings in the second, third quarter of 2021.
So as Jeff alluded to, I want to move on and talk about the stimulus plan, because Biden has unveiled his $1.9 trillion stimulus plan, which investors, especially on Wall Street Bets and Robinhood, are really reacting positively to the news that they're going to get $1,400 stimulus checks. So does this plan do enough for the economy? And Chris, I want to pose that question to you first.
Sure. So I think you have to step back a little bit and think that, the foregone assumption is that dollar for dollar is going to get spent. And the New York Federal Reserve had a study out recently that showed that was simply not the case, that I believe about 35% of the last round of stimulus checks was actually saved, about 36% was used to pay down credit cards. And when we think about, the state of the consumer, particularly since the last real stimulus payments stopped, towards the back in the summer, odds are consumers are going to replicate that pattern when they get this $1,400. So not likely to see a one-for-one spend. Having said that, though, people will go out and spend what they can. I do think that we're going to have some pent-up demand in certain areas. Clearly, with the pandemic continuing to play out and restrictions to thwart the spread of it, I do think the companies that are going to benefit the most will be those that have really embraced digital shopping. So of course that's going to mean Amazon, Walmart, and the like, and it probably means good volume still for United Parcel Service as well. One other thing, and you guys touched on it, with regarding Yellen and the Fed and interest rates, I do think that the housing market will be good, and at the margin, this will play out well for a number of different stocks that tie into home decor as new homes.
Jeff, I want to ask you, how can this money, if it's being put into the market by investors, really benefit the stock market?
Well, a couple of different ways. One, if people are spending money, that's obviously going to be a tailwind to business itself. So when they have those payments, they could be spending more money on digital shopping, as what Chris pointed out. So say you're spending money on Amazon, well, that a package needs to get delivered. So that also impacts United Parcel as well. So it hits at different touch points. If the housing market remains strong, that's obviously a very big thing as well, because housing tends to punch above its weight. What I mean by that, so not only do you have construction taking place if it's a new home, but it's all the other goods that people shop with to build out their home, whether it's a cable package, which could benefit, say, like a Comcast. It could be decorating, so that could be a home goods for a TJX, or if it's a luxury, on the luxury side, maybe a RH, the old Restoration Hardware. So I think with just this inflush of cash and more fiscal spending, you could see it touch so many different parts of the economy.
Bob, I want to ask you, with all the economic picks that we've seen from Biden, what do you make of them, and how do you think that they can benefit us, especially as the economy tries to come back from the coronavirus?
Right, and I think that that's such an important component of Joe Biden's success in the early part of his career here in the White House. I think that we have to start with that spending bill, and I think, as he said a few months ago, back in late November, is that this is probably just a down payment, and he talked about the first spending bill that barely passed. Which included $600, and then he threw in another one, $1,400, making it even $2,000 for consumers to get some relief. I think you have to look at this whole economic package and believe that there's going to be much more coming on the back end here over the next couple of months. That this $1.9 trillion package, which look, let's face it, you never get everything that you want. And I think that having Joe Biden in there and some of the other operatives on the Democratic side, is just going to be more chances of compromise than there are just jamming something through. But I think you have to look at over the next couple of months, maybe March, maybe in May or June, and know that there's going to be some more coming. In addition, the fact that the Fed is blessing this extra stimulus or activity, and they're going to keep on the sidelines and keep rates low. That's also an equalizer as well too. So now you're getting fiscal and monetary stimulus simultaneously. That could be a huge juggernaut for the economy here. I think just a couple of days ago, I think Goldman Sachs came out and said that they were expecting to see 6.6% growth in GDP in 2021, and I think they could be on the light side for that. And that's a robust number, but because of all the stimulus that's going to be coming through the pike, and not just fiscal but also monetary, I think that's certainly an achievable level if all things go right.
All right, let's talk about stocks and sectors to watch during Biden's first 100 days. Now, Jeff, over on Action Alerts Plus this morning, I was talking to Jim, and it almost made me smile a bit because he's very bullish on Ford right now. And I want to ask you not only what stocks Action Alerts Plus is watching, but also why do you guys feel so bullish about Ford at this point?
Yeah, so Ford, so we've owned that for Action Alerts Plus for a few months now. So what really drew us into this name is this turnaround plan being orchestrated by their new leadership team with CEO Jim Farley taking over. What they're doing is going on right now. They have a bunch of new products being launched. So that's whether it's the Bronco Sport or the Mustang Mach-E, an electric vehicle. So that actually helped lead to an inflection point in retail sales in the month of December. So finally, we're going to see the sales return to growth. And at the same time, they're restructuring so many different parts of the business right now and getting out of unprofitable areas and no longer selling cars that just really aren't making money. And you saw this news highlighted a couple weeks ago when they announced their restructuring plan in South America, and that they're going to cease production in Brazil. So we think the auto sector It's a strong place to be in 2021, not only on the OEM side, but there's also different components as well, whether it's a DuPont who plays into the automotive supply chain or even semiconductors. I know there's a chip shortage right now, but 2021, this year, is really supposed to be the big year where we really start seeing the automotive Ethernet really come into play, and that works into NXPI, which we don't own for Action Alerts Plus, but we've had it in the bullpen for a very long time. But there's other companies as well, like a Marvell Tech, that plays into that as well. But just go back into the first 100-day question with Biden. I know one of his biggest tasks right now is to vaccinate 100 million doses within his first 100 days. And I think that plays directly into CVS Health's hand, just with their large retail pharmacy footprint. We haven't seen the vaccines extend out from long-term care facilities or the hospital settings yet. But I think once they get into the retail pharmacy setting with CVS Health, I think not only are they going to enjoy some of the benefits of administering the dose, but it's also going to bring people into their stores. So I see finally, whenever these vaccines kick into CVS hands, as that being a catalyst for that stock as well.
All right, Chris, I want to ask you, what stocks are you going to be watching with the Biden first 100 days? And definitely, as Jeff just pointed out, with inoculations of these vaccines supposed to spike up.
Well, I think when we look at, some of the things that are on the table, we talked a little bit about the stimulus plans already in terms of $14 checks and what that would mean for various sectors. But I think when you start to broaden out a little bit and you think of the multi-stage aspect of the stimulus that Bob was talking about, I think you can circle back to the infrastructure side that he was talking about. Look, when the American Society of Civil Engineers gives you a D+ for U.S. infrastructure, we know that something has to be fixed. We also know the president wants to put people to work in good paying jobs, and that's a wonderful 1-2 combination. And moreover, rehabbing, U.S. roads, bridges, tunnels, ports, airports, that's something that governors can easily get behind. So I think that would be a very smart move. Bob mentioned Caterpillar, John Deere earlier. I would continue that list of companies that we're going to look at. Everything from a U.S. Concrete to a Martin Marietta to a Granite Construction. Those are the ones that we'll be looking at. And also, too, tied into that, to some extent, Biden is also talking about challenging the digital divide and extending rural broadband. Now, that's going to stretch out a little bit, and I think that'll be good for companies, obviously on the infrastructure side for digital infrastructure, whether that's an Ericsson, perhaps a Nokia, but really more like a Cisco, a Corning for the glass fiber that they have, Dycom Industries for the guy, especially contractor that actually builds the physical networks. So those will be some of the areas that we're looking at, Catherine. And one other one too, just to throw it out there. I know a lot of people like to talk about this, but on the cannabis front, a Democratic, government might be a little more friendly to that, but we're going to have to see progress first on legalized banking for cannabis companies in order for that to really take hold.
And Bob, before we wrap, I want to ask you what catalysts you're going to be watching in the first 100 days.
Yeah, so the catalyst I'm looking for is how Congress and the Senate is going to respond to something that's kind of near to Joe Biden's heart in terms of the climate and the environment. And he really wants to get things going in terms of alternative energy. And we've noticed over the past couple of months, certainly since the election, that a lot of these EV or electronic vehicle type names, battery names have gone crazy. A lot of names from China and a lot of smaller companies from over here they've just gone ballistic. I mean, some of these companies have soared 200, 300, 400, 1,000%. So I think some of these alternative energy names, I'm sure investors have gotten way ahead of themselves in these names. But I think some of the areas that I'm looking for, Catherine, are in solar. Like First Solar is is the biggest player there. I know it's one of Jim Cramer's favorite names. SunPower is another one. Canadian Solar, which interestingly enough is a Chinese company, Canadian Solar. But some of these names out there are going to do extremely well in an environment that is friendly towards alternative energy. we talked last time about one of the areas that I think is going to do poorly is probably oil and gas. They've done well because of OPEC cuts, but I do think that they're probably not going to do as well in the next coming months or years, especially since some restrictions are coming down. I think, correct me if I'm wrong, I think today he was signing an executive order to cancel out the Keystone Pipeline or something like that today. So I think, oil and gas is going to have its troubles, but I think it's these alternative energies that are going to be the names to be watching over the coming years.
Well, guys, thank you so much for tuning in. Panelists and viewers, thank you for sticking with us as we dealt with a little bit of technical difficulty, as is the case when we're living in these, as much as I hate this word, unprecedented times and are working fully remote. Thank you so much for taking the time to join us today, and I look forward to talking to you guys about the next 100 days after we get through this time period. So thanks for sticking with TheStreet.com. I'm Catherine Ross, and I want to thank Chris Versace, Bob Lang, and Jeff Marks for joining us today.